All right, guys. So we're live. It's 9:34 a.m. in the morning. We just had some decent inflation data that showed that inflation was still out of control. So the market, it seems like was pricing in not good data yesterday, which is why we saw that bloodbath. And you saw typically towards 3:30, 4 o'clock, kind of the stocks recover. And then after hours, you saw it completely go crazy. So obviously, very favorable news. Yesterday, as you saw my Twitter, I did a few leaps. It's a good opportunity if you're long on a stock when it goes down like that to really capture the ability to control those shares for however long it is that you need. So what I'm going to do today, I'm going to sell calls on those stocks so that we can start generating some income, right? So as you can see on my portfolio, we actually have a lot of options that are expiring this week, right? What I want to focus on is seeing on which ones need to roll, which ones we can close early, and which ones we can just monitor, right? We don't want to do anything drastic, but we do want to be conscious specifically on the puts that we sold. They're high risk because the last thing we want to do is get a sign. On Robinhood, margin is free, so I'm using a lot of margin right now, and it's free as long as you don't get assigned. So I want to make sure that we don't get assigned. Now, my general overall is to raise some. I don't want to be over leveraged. It's going to be turbulent coming in presidency. Regardless what you think on his policies, it's going to be a change from what the market used to of pretty much just status quo legislation and very positive media regardless of what was happening. So let's go ahead and see what we have here. So let's start with HIMS, right? Let's look at the HIMS position. So it took a pretty big plunge yesterday. I think it was down close to 10%. My goal with him is really to get to a position of 500 shares. We have 100 already. We have one call we sold. We have 10 $25 puts expiring at the end of the week. So doing okay on those puts. I'm not concerned on those. These $20 puts, they're already up 50%. We sold these in November. So it's just something to keep track. Now, what I would do is see if we have any calls that we can sell or calls on and start bringing in some money to start our cost basis. So you can see here that we bought 3 long calls. We bought $28 calls expiring April. Then we bought a $25 expiring January. Now, these April ones, I'm going to see how far up we are on them because truthfully, we're up $70. I may let these go. My concern is that there isn't a lot of time on these. We have about 3-4 months. So maybe what we'll do is, let's see, $800. Go ahead and just sell one of these. What do we buy these for? 5, and they're worth $438. See what calls are looking right now on January 24th. So when we look here at the option chain, what we're going to do, the whole goal of buying these leads is really to control 100 shares without having to spend the money on it, right? So I'm controlling 100 shares for $450 as opposed to having to spend $2,500 doing that. The premium that you're bringing in stays the same, and that's really where it becomes attractive. So you can see he bought $28 call. The $8 one is coming in at 85. So what I'll probably do is I'll sell one at the $28 one. This is a pretty risky, if you ask me, mainly because it's pretty, we're already at 26, 28. But what we're going to do then is we're going to do a further one, January 21st, and then we're going to bring in another $100, ideally at 29. Let's see if we can reach 105. And if I'm not mistaken, I think we have one more call that we'll be able to sell on. And so that one, see if we can go up a little high. I like to scatter them a bit because, if it runs or, if it decides to run, the last thing you want to do is be chasing the call. But at the same time, you do want to try to squeeze. You can requirements. Huh. So then maybe what we'll do is we got to raise some cash here. So probably sell one of these back. Not a crazy win, but a win is a win. They're not letting me do much here. All right, let's see if we can sell some calls somewhere else and bring some money in, and hopefully Robinhood starts being a pain in the ass. So with him, we're gonna leave one in our back pocket, in case it continues running. This is one where I am running that poor man covered call again. Crocs has been interesting because it was reaching out 110, 111, and yesterday just went back down to 105. This 110 call that's expiring this week, we've been rolling this one, so that's why the credit's close to $600, but almost 70% captured here. If it runs all the way past 110, I have no issue rolling it again. As long as I'm for a credit, I'm fine. Our long call on Crocs is pretty far out, so I'm not necessarily concerned on it. Riot is pretty much our own miner. I closed out our Clean Spark position because I was not having a great experience with Clean Spark. Riot is doing phenomenal. It always comes back. I think if you manage to get Riot under $11, $50, $12, you're in a spot. I'd like to get 100 more shares of Riot and call it even. We have 12 puts that are $12 puts expiring 7. So we're gonna see how much meat we have left on these. $28. We sold them for 54, so we're already at 50%. We have about 140 left. My personal outlook on the market right now going to be pretty bullish until Trump's inauguration. I think after that, reality sets in. I think the market's going to try to price in that risk. So I'm not going to touch anything necessarily this week, but next week I'm going to be very vigilant as to what I do sell. These 1150 puts, we're also going to let these run. I think this is all e-money right here. We've got these 1150 calls we may have to roll. But again, I'm going to let these run because what I don't want to happen is, I roll this 1150 and then on Thursday we have it just completely crash, and I rolled these 1150s which were supposed to print, and let's say hypothetically Riot is at 1125, and now I rolled out the calls and I rolled out the put. Ideally, you only want to roll out one of them. You're doing the strategy of seeing the calls. You can see here I sold an 1150 and 1150 puts. I sold $12 calls, I sold $11.50, I sold $12 puts. And that's pretty much what we've been doing. Now you can see here, yesterday I bought a $12 call on Riot. This $12 call is going to be the one I exercise to get to my 500 shares in Riot forms. The goal with these leaps is really give yourself time to see if a stock performs while you reduce the cost basis on it, right? So ideally, you want to get to 0 basis, so you have the option to buy those shares cost. So that premium that you paid, you generate that in the time you're buying. And then if the stock is higher, then it makes sense to exercise. Otherwise, cut your losses. So I'm going to see, and I'm going to probably with January 31st, 14, and just to give you an idea on returns on these poor man covered calls. This is why they're so lucrative. The premium you're getting on the covered calls stays the same, but your cost base is a lot lower. So your ROI is a lot higher. And I'll give you a good example. Controlling 100 shares at $12. Right? Had I bought shares, it would have cost me $1,000. But I paid $420, right? So now, so you've got 420 versus 1,200, so less than half. So if I go and sell a call on these things now, which we're going to sell it for the end of the month, and let's say I sell 13.50 at 65, $65 on 420, which is an ROI of 15%. It's an ROI of 15.5% in 17 days. Versus had I bought the shares flat out, it would have been 5. So we're squeezing out an additional 10%. So I'm going to bring in. I'm going to be bringing in. Let's see if we can get it. So I've got some liquidity coming in this week because I really need it. It's not even letting me place trades at this point, which is crazy. What I'm probably going to do is close out some. So here's what I'm going to do. Let's go back to Riot. And I'm going to see which ones are the ones that have the least amount of meat on them, that least most amount of collateral. So if we go to the 11.50 puts, we've got $15 times 5. What is that? 30, 30, 60. That's like $75. So we're going to go ahead and close this $75 here, this $80 buy to close. So we're going to do 5, 15. We're seeing $5,000 of collateral. Now let's see if we get these filled. $16. So we're going to leave $80 on the table so we can continue trading. So here's what we're going to do. We're going to go to HIMS, do that trade that we couldn't do. So I'll call for to the 31st. You know, like this, a little bit more aggressive here. Try to at least get $100 in through the door. So we're going to do 120. Let's see if 120 gets filled. Position high margin colors. So I need more buying power. Does it do it on? Let me do it on Riot. Let's see if Riot lets me sell these. So call. Doesn't. Oh, here's what we're gonna go to try to release a little bit more collateral, and we are going to go to our got a $24 put, call. You know, these we could probably close out. These are some $20 puts that we sold. We are already collected $850. So I'm going to buy the close. How many do you have here? 10 or 20? 10. I'm going to close them at 4 cents. So we're going to pay back $40. You know, when I'm positioned, and look, we just released $20,000. When I'm positioned so well on these trades, I usually let them ride, because why not? But that is a good line of thinking when you have the ability to do other trades. If during your ability, then it doesn't really make sense to squeeze out another $40 and wait 4 more days when you can find other opportunities, right? Like him right now is surging. Who knows if tomorrow is not, or tomorrow a flat day, or it's going to be, you never really know how the market's going to react. So you have to take what the market gives you and do what you can with it. That's really what it comes down to. What does the market give you? Do what you can with it. Yeah, I'd like to get this filled at 105. That'd be nice. Here's what we're going to do. We're going to leave it at 100. And then we're going to let the market do it. All right, there we go. Filled at 100. All right, so I think on him, we're pretty set on making our rentals, as I like to call these shares, or long calls, putting tenants in and making them work. We have 100 shares, right? And we have 1 call, 2 calls, 3, 4, 5, 3, 4. I'm sorry, 3, 4. We have 4 calls, and we have 1, 2, 3 plus our shares. So we're currently maxed out. I'm not going to sell puts today. IMS is obviously doing very well. It makes no sense to sell puts on a dips. Now, let's go back to Riot, see if we can get that trade executed we were trying to do. So we go to Riot, and we're going to go over here, sell some calls. Let's see if we can go out to January 24th, January 31st. It's $14 one. And let's see if we can fill that 60. I think 60 would be great. Still getting that air. I think Riot just requires a lot more collateral than I have. I think that's the. Do I have pending call values? One buy plus my 400, 500 call. I have 5 call contracts that I can sell. I've sold 1 and 3, so I do have what to do. Buying power, 1,000. Not sure what's going on here. We'll have to revisit Riot in a bit. Let's continue with our trading here. So Riot's pretty much taken care. Let's go to our other golden child, Rocket Lab. Rocket Lab came back. I mean, it was pretty much. However, if FBI data coming bad, I think the markets would have very seriously tanked. So we did have the ability yesterday to open up a few trades. We opened up 5 credit spread, 24, 21 puts. I like the credit because they require us collateral. In the worst case scenario, I can always sell the puts and just hang on to the puts that I have sold and just continue rolling those out. So those are $24 puts. They're pretty at the money. This position should print, should Rocket continue to do well. Bought a $25 call yesterday. We bought $20 calls well, and we have $30 call. I'm sorry, we sold $20 calls and we bought $30 calls. These $30 calls, they're very bullish. I don't know if I want to be that bullish right now. They're around $300. So maybe what we'll do is we'll sell some calls on them and just see what happens. I'm not necessarily trying to cut them at a loss right now. But what I do want to do is start bringing some money in through the door. I think we can close these two. See if we can get filled at $6. We brought in 100. We brought in $200 with these. You're really gonna fill me at 3? Come on, don't make me pay 4. All right, we'll have to pay 4. We'll get this done. What I'm doing now is instead of waiting until Friday, I'm gonna close ones that are already pretty much exhausted, that are so out of the money that they've lost almost entirely their whole value. This one has 13. We'll leave that 13. $27 put. We may have to roll, but we'll give that more time. $32 calls. I think we can also close. They're worth $2. Where are we? 32. So we have a $31 call here, which we're gonna close on this. Buy to close. See if we can get those for $5. I'll give them $5 back. We have $85 in this premium, so pretty decent. And now we're gonna do is we're gonna see what happens here. Do we have any more that we can close out? We have a $20 put. We have the 14. We'll leave that one a bit. $31 call. I think that's the one we just sold. I think it's been updated here live. Let's refresh the screen. All right. So I think that's pretty much it. These $20 calls that we sold, we're just gonna let those run. And let's see how much we can bring. That Rocket Lab is up close to 2% today. 2.9. I sell these. I'm gonna try to be a bit bullish on my premiums here. So we're at 24. Let's see if we can sell. Well, here's the long calls that we bought. I think we bought a few that are in the 30s, right? I always try to sell them at that. So we have 3 at 30, and we have 1 at 25. Further out, I really don't want to be in a position where I'm underwater on these. So I'm gonna sell 3 at 30, which will sort of be my safe haven in case it runs up. I'm not underwater on my calls, right? Because if you're calling at 30, if you have your long call at 30 and you're selling $28 calls, you're essentially setting yourself up for a $200 loss if they ever get assigned early, or if for some reason you can't roll them out. I always try to do that. Now, for the ones that I've at 25, I'll be a bit more aggressive because I don't have that issue, right? And I bring in maybe 2 at 7. Let's see if we can get filled. Right now we're on the high end of the. So one got partially filled, two got filled. Perfect. And I'll do another two at 28. So that way, in case they all get filled, we're not all in the same problem. You don't have all your eggs in one boat. All right, so I think we've been about $400 to $500 this week. Do I have any more shares available? Let's see if we can sell these. Not enough shares. All right, so Rocket Lab is all locked in. I think it's going to be mainly our puts that are going to have to be rolled. This is all taken care of. These $25 puts are in good position. Buy it. These are fine. These are fine. This one went after roll 750 call. We did Rocket Lab. So now let's go to SoFi. Let's see what we're doing with SoFi. So with SoFi, we have a 12 call expiring on the 17th. We have 1450 puts next week. Very bullish puts. We have, which I'm not entirely sure I want to stay in that position. These are at break even. So these are essentially, I mean, we sold these a week ago and they've really done nothing. But you know what? Let's leave them because that's our reward if earnings perform as they should. If not, we'll just continue rolling them down. We've so far $12 calls, 10 $12 calls expire in March, so I'm not concerned about these. $12 puts, not concerned, and then we bought two $17 calls. We have about, how many shares do we have? 1,100. So I think we have two that we can sell. When is earnings? I don't want to be in a position where we run up and now run water. You know, I think earnings is January 27th. So this is probably going to be, let's see, 1835. See how high the premiums are with the earnings. So I am probably going to sell them just because, you know, if it goes from 14 to 17, that's incredible. I believe, where did I buy my calls at? I bought them at 17. Okay, so I do want to be somewhere above 17, which is the goal here. So let's go to the 31st. And we'll do them right here. Two at 38, two at 37. So we'll put $60 through the door. Zero shares available. All right. Now, is it smart to sell when you're expecting? Yes and no. Yes, if if you think you can position yourself, even if it, let's say SoFi kills earnings, right? It goes from 14, 15, 16, 16 and a half, even if it runs up a crazy amount, you think you can position yourself above that, I think you should do it because the premiums are so high because of the expected volatility that, in my book, a bet that I'm willing to take. In worst case scenario, if it's above 17, I'm okay rolling it out 2-4 weeks. I have plenty of time on those. So that's something I'm okay doing. What I'm going to do real quick, guys, is all right. So we're back here, and so we've pretty much taken care we need on this on the that we bought yesterday. Now I'm going to look at some leaps that I already held. Target was one of those companies that I bought some leaps on. I've been selling calls against it. I think Target was extremely undervalued. I think it was quarter four earnings they did very badly, or quarter three. I think it was quarter four, and it just tanked. And so I bought 2 calls, and let's see how those are performing. So we're actually up about $200 on those. Right? And the ideal scenario with these clever call plays is you want to, the ideal scenario is that the stock continues to go up, right? Because at that point, your contract gains value while you're bringing in premium. And then ideally, depending on what your goal is, whether you want to acquire the shares or whether you want to sell the contract and just make that profit, you have to have clear, right? Because you need to make that decision at around day 20 or 30 days. So a month, month and a half left on your contracts, the theta decay starts to accelerate. So that means that your contract's going to be losing more of its extrinsic value faster. It has a lot of it intrinsic value, then you really don't have that much of concern, but it's much of an intrinsic value, which is pretty much the difference in the share values. Then you should really consider exercising the call and buying the shares if it went up that far. So those are things that to keep in mind. So these are 25s. Obviously, I think these pretty in the money, but they're about $200-300. And right now I've sold $140 and $142 calls. I've been rolling these. I've been playing catch up because Target's been going up drastically. These 140 finally going to expire worthless. I had to roll the 140 in February, right? So you can see how that works. Now, I don't mind rolling them because at the end of the day, as long as I'm above 125 and I have to keep rolling up strike price, the intrinsic value will hopefully save me. It's a good, in my opinion, to be in. So right now, these two are doing fine. Target, this one still has $70 left. I'm not going to touch it. I'm going to let it do its thing. Now let's go to TSLL. That's our other stock that has things expiring. I like LL because of several things. It's the premiums are bigger because it's more volatile because it's 2x bull, smaller share price. It allows me to share, you don't have to save $40,000 to buy 100 shares like Tesla with with just 2,800 you can already start wheeling. I have a pretty significant, I have close to 1,400 shares. Um, Ideally, I want to get 1,500. About more around 25, 24, but I didn't. So right now we have $1 put expiring on the 17th, $20 call, which seems like we're going to have to roll out, which is fine. We have a 2870 call expiring next week, keeping an eye on. Right now, it's still not in the money. And we have 2950 calls, which are fine. Those are out of the money. We have $20 1970 puts for June, which paired with these calls. So, truthfully, I'm exactly concerned about this. These are doing fine. 3070 calls are printing right now. Stock collateral 1,400 shares. This is just doing what it needs to do. Yesterday we saw it go all the way to 24. So that's where we're at right now. Now let's look at what else we have. So that's pretty much everything expiring this week. I'm curious, and that's about it. Tomorrow is usually when I either roll down or not. You don't want to wait till the end of the day because then, the end of the contract, because you could get assigned, and that's the last thing you do because then you do have to start paying for margin. So let's see. Our $25 puts are probably our biggest concern now, but these are losing by the second. The ones I think that are in money right now, I think it is, for example, Rocket Lab. But Rocket Lab is extremely volatile. This could go up. We're only down 120 bucks. You see, and the way to calculate how much extrinsic or intrinsic is, right now the stock's at 2041 or 60, right? And it's a $27 put. So that means that there is 250 intrinsic value. So it's 240 of intrinsic, and it's 270. That means there's only $30 worth of time of extrinsic. So that's why now we haven't really made our decision. I think I'll make it tomorrow. Now, just to finish off the trade session here, let's see if there's anything else that we're kind of keeping an eye on. So AMD is another one that I bought long calls on. AMD right now, we have that 155 call, which is 21 left. It expires this month. I think I'm pretty down on these AMDs. AMD has been kind of like the ugly duckling of the AI movement, and sometimes it's better just to bet on the don't bet on the it's higher risk. There's a higher chance that the winner will continue to win. Then there is a higher chance that the loser or the second, third place will go up to first or second or move up. So I have 1.5 calls. I've lost about $600 on these. We still have until April. So I'm not going to do anything drastic on AMD. We're just letting it play out, see if AMD is able to get their shit together. Tesla, so the script Tesla is we're just rolling our shares that we got caught on the water nasty. So I'm trying to figure out a good entry point to buy some long calls to then give me more upside. Because right now my upside is completely. I do think Tesla, while it has a clear path forward, is going to run into some issues as far as acceptance of the actual AI self-driving, right? Like, there's going to be accidents once people get into the self-driving, and as it scales, there's going to be more PR, there's going to be a lot of negative PR, and I think there's going to be a time where we're going to see the dip a little bit more. That's when you have to be ready. I mean, hopefully, otherwise this is going to keep going at $1,000 a share. So what do I have here? I have a 220 call expiring in February. We have a 360 put that I sold January 31st. I think I collected about $1,000 on this. So we are up about 400. And then I also did credit spreads, because the credit spread requires a lot less collateral. So I'll give you a good example, right? So this 3 put that we sold, right? We collected 1,050. So if you do the math, 1,050 on $36,000 of collateral, you're collecting about 3%, 2.9%. Okay, about 2.9% in a month is phenomenal. Even less than 2 point. But now let's compare it with our credit spread. And the reason why the credit spread is forms is because it requires a lot less collateral, but you're also paying for it. So let's do the math on it. We are bringing in 435, and it's a collateral requirement of, so you do the 40 put that we sold minus the 305 that we bought, so that's $35 of difference. 35 times 100 is 3,500. So we brought in 435 divided by 3,500. It's a 12.5%. So this credit spread is close to 6 times the return. 6 times the than our naked put. And you could argue that it's less risky, because this is at 360, this is at 340. Right? The only thing that you have to make sure you keep in mind with these credit spreads, is to have the collateral required, if needed, to support if you need to, and roll down the 340. And I had that exact scenario happen with MicroStrategy, MSCR, where it was completely tanked, and I was going to sell the puts for profit, but then I had to roll down the puts, because otherwise you have to close the credit spread regardless. If you have that collateral, you just have to. And if you're in a position where you're lost, then it's not going to be pretty sight. So, for example, these Tesla 345, right now I technically closed. I already have 50% of the look like. If I open these on the 10th, so in 4 days, if I wanted to, I can lock in a let's see, 215. In 4 days, I can lock in a 6% return. In 4 days, so you may want to explore more of these. To be honest with you, and pretty good. So that's pretty much the gist of. We have these little lottery tickets, and Face, I think, has found pretty good support around the $65-$70 range. So I felt cool selling these puts. These are, again, credit spreads. So if I look at this on a return basis, that's $1,000 of collateral and collecting $441. So $441. You're collecting much 44%. So I 44% return in a month, and all I have to do is go from 66 to 70. So these I like to take, very asymmetrical returns, high return potential, low risk. What else? Tesla, M-Face, Target. We talked about it. Crocs. We talked about it. SoFi. HIMS. This is not loading. Why is this not loading? Let's go refresh it. And so what I'm going to do for the rest of my day is pretty much update my tracker. I think here's the most important thing that you can get into the habit of doing as a trader, because it gives you the data points you need to decision whether to cut or roll a position or just take wins. It's not a lot of traders do, but if you're going to treat this seriously, it's something you need to do. So that's pretty much it, guys. I will continue to post on X, go live on Friday. I'll try to go live on Friday. But for those that are new, pretty much my portfolio and any questions that you guys may have, go through any things and help you guys become better option traders. The options is that it's like riding a bicycle. You're going to learn how to ride a bicycle by watching YouTube videos. You have to get on the bike and pedal, and you're going to scrape your knees. And my goal is to make sure that that scraped knee is something that just get up from and put a band, as opposed to amputating your leg. And that's actually the goal, and help you guys maneuver that we're living in. There's the election, there's a lot going on, and because of that, the markets are volatile, which is great for option sellers. So having said that, guys, I will see you at our next stream. Thank you for those that are logging in. Follow me on YouTube or X at Snowball Hustle, and wish you the best with your trading. I'm always available by DM if you have any questions.